Hello guys. Today's lesson I'm gonna teach you about um, how to draw your order blocks, how to like put it in the correct way. Let me type it a little bit faster. So for all of you who recently introduced to smart money concept, in smart money we also focus more on the correct order blocks and also the inducement part where a lot of traders fails to execute their rightful trades. So a person blocks. So now let's get into business. So let's just say you have a downtrend movement, right? We are moving downwards. So here's I'm gonna put my order block after breaking. After breaking my low, this is my low. This is my low. Let me also name it break of structure. In short, in the road is. So what I'm expecting is the market to come back and mitigate at this order block for me to place an entry. That's how simple we can trade order blocks. We exited the last low. So another thing I wanted to show you guys. Let's say now we never been able to reach at the order block. Then we created something like this. We created something like this, a new low. Then we came back somewhere around here at this order block. Let me leave it right there. We came in this order block and mitigate. And created a new high. So my question in this is how will you be able to trade back at this order block? So what is going on right now? Since we failed to mitigate it at the first order block, but we created the second order block and came back and mitigated in order to push down. This is leave us with the choice of liquidity part. We know, okay, since we have this equal low, equal highs, we're expecting the market to come back and swap the liquidity in order to go at the last wait a minute, let me find something to represent my liquidity. Let me put the cash or the dollar sign here. This one is okay. This cash bar represent my liquidity area. So since we have this equal highs, I'm expecting it to be swept in order for me to trade at this level. So let's say you place your trade here. You're expecting another order block at this area. That's how 90% of you will be failing in order to execute this trade. So once you expect this kind of order block, then it happens this break above. Once it break above and came back to the first order block, it's normally called inducement. Because why do we call it inducement? It's mainly because of this higher low. It never came to our point of mitigation at all, and it also created a liquidity, and it also created a false order block in order for you to fail in this area. A lot of traders, that's why they don't understand how do we normally trade these order blocks. They are so simple. In order for you to understand them, you need to know what you are exactly doing. That's how simple the market is. So this tutorial, I won't make it long. I removed the wrong thing. I want to remove this. That's how you open up your trade. So now let me clear all of this and go to the real chart for examples so you can see. So I'm starting on a daily time frame. As you can see, we have this kind of movement, right? We have this kind of movement on a weekly time frame. I just normally wanted to see how are we moving. So we are in a bearish trend, and now we're starting to create new bullish trend. Reason being is because already we broke this last lower high and created a new high here, which is at this area we call it change of character. It normally means we are now looking for buys for a long term. We are creating a new trend, which is higher lows, higher lows. Then when we were moving in the downward trend, we know exactly we were creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So now we are creating higher high, higher low, higher high, higher low, higher high. That's how we are moving. So I'm starting on a weekly chart. As you can see, we are in a bullish right now on the daily. On a weekly chart, we were bearish, but we are now starting to look at the bullish momentum now. So in order for you to trade the order blocks, first one is this one. We had this order block, right? The correct order blocks, we had this one. We had this one. We wanted to trade it 50% and it's okay. In order for you to trade this in a smaller time frame, like 4-hour time frame, let me show you how does this represent our liquidity process. Let me go on. Let me go on. Let me go on. in so far on a 4 hour. Yeah, at this area. On a daily time frame, it can literally show you we had this order block here, but we never came at this area. It means it gives us a lot of more time for us to always knowing that the market will eventually come at this area in a long term. So now we see, in order to take this trade on a daily time frame, it confirms this is our order block. We know very well we have created a piece of liquidity here. This is our liquidity zones. Then after liquidity, we sweep the liquidity. I already told you this is our liquidity symbol for now. So we sweep liquidity in order for us to enter a trade here. To enter a trade here, we know very well we exit at the last high, which is our good trade is 3 to 62% risk ratio. So the very same thing, let's now look for the second order block for us to enter. This is valid. This is valid. So now we are looking at this one. We're going back to the daily time frame to see what's really is going on here. For hour, let me go to the 2 hour and go back. Yeah, I want it here and analyze this. Since you saw how the trade worked out, the valid order blocks is our second one from the same day. Let me go back to an hour, 1 hour. That's how you are going to look for your order blocks in order for you to take a good trade each and every day. You need to understand what you are exactly doing. Moving backwards here to that area and show you how do we see our liquidity. I'm going to come at this point of showing you liquidity all the time. Let me just zoom in here so you all can understand why are we focusing on this. Since here we never created a good order block, we're gonna take this pullback here before the market breaks the structure. This is a good market structure for us to show us how we're gonna take a trade, mainly because of the pullback here on the 1 hour time frame. It literally shows us that there's no way we can draw this as our order block because of this long week. It also represents that the market in a long run will eventually cross this line. But for now, as long as it's creating a new highs and new lows, it's how it's gonna move. In order for us to trade this, we definitely see this liquidity build up here. Then after we swept the liquidity in order to come up at this pullback, then this pullback it also represented as on an order block. We know very well that when the market comes at this pullback, that's where we execute our trades. It's not always 100% that you will always get a good entries. That will never put you in loss first, but you can actually see how it's moving. So the market is moving in patterns, same thing over and over. So I think I'm gonna cut this video here. So you all should ask question about this lesson. I made this video on Thursday. Yeah, it's Friday in the 12 a.m. So I'm gonna post this video later on. I hope you all understand this lesson. I'm gonna stop this video here. Okay.